My name is Nicole Mjoli, for those of you who don't know me, and for those of you who do, welcome back. I hope you guys are doing well. And today's video is going to be a continuation of our tax mini series. So today we're targeting capital gains tax specifically. Please guys, do remember that I am not a financial services provider. All the info that I share in this video is just me sharing info that I've learned throughout or over my past little life investing. And if you are looking for financial advice, please do contact someone who is registered with the FSCA. I am not that person. So anyway guys, let's get into the video. What exactly is capital gains tax? Like I mentioned in my previous video, tax is the money which SARS comes and collects. It is the money that they come and say, Ella, I want my cut. So what exactly is capital gains? Capital gains is profits that are made on either the sale of a property or the sale of an investment on asset, right? So for example, let's say you bought MTN shares and 2 years later you decide to sell them. If you made a profit on that, then the profit, a portion of the profit will go to SARS. So now that we know what capital gains tax is, let's get into how capital gains are taxed in South Africa, right? So if you don't know this already, if you haven't watched my previous video, in the previous video I explained the tax tables and your marginal tax rate. So for those of you who haven't watched the video, please do go back and watch it. But I'll just give you guys a summary of what a marginal rate is. So your marginal tax rate is the percentage which you are taxed for your income, right? So let's say, for example, you have a salary or you earn interest income, you will have a specific percentage which applies to you, right? So let's say, for example, it will be 18% or 26% or whatever percent. I'll just attach a picture of the tax table as well, right? So remember I said, your marginal tax rate is very important because it also applies to your interest tax, and now you will see that it also applies to your capital gains tax, right? So once you have figured out where you fall on the scale depending on your income, you will get your marginal tax rate. Let's say, for example, 18%, right? After you have that amount, you put it there, right? You just write it down somewhere, 18%, right? And then we have what we call the inclusion rate. So what exactly is the inclusion rate? Inclusion rate is the amount or the portion of profit which SARS taxes. So instead of SARS saying, okay, we'll take 100% of your profit and we apply that 18% to this 100%, they will say, okay, no, of that 100%, we'll only take a specific percentage and apply this marginal tax rate to that. That 18% will apply it to this portion. So currently in South Africa, the inclusion rate is 40%. So SARS doesn't look at 100% of your profit and then applies that 18% to that 100%. No, they'll only take 40% of that profit, of your total profit, and then apply the tax rate to that, your marginal tax rate to that. And then they say, okay, now Rona will take this piece. Let me use another analogy, right? Let's say you have a cake over here. Let this cake represent 100% of your profits, not your initial investment, just the profits which you have made, right? 40%, which is the inclusion rate, will be represented by a slice of the cake. So instead of taking a slice of the cake and taking that as the tax, they will only come and take a bite of that slice, and that will be the tax, right? So that will be like your 18% or your 26% or wherever you fall in on the tax table, that will be the percentage which they will take. So that is basically how your capital gains are taxed. So with that being said, remember on your tax tables, the maximum a person can be taxed according to the tax table, or the maximum that your marginal tax rate can be, is 45%. And then with that 40%, which is the inclusion rate, it means that only 18% can be taxed maximum. Like 18% is the maximum that a person can be taxed on the capital gains. How did I get that 18%? You basically take the 45%, which is on the table, and then you multiply it by the 40%, which is the inclusion rate, and that will give you your 18%. So the maximum a person can be taxed on the capital gains in South Africa currently is 18%. Of course, again, T's and C's apply, right? So remember in the previous video I mentioned that there are things like exemptions and deductions and all those things which apply. So for your capital gains, we have an exemption of 40,000 Rand currently. So what that means is the first 40,000 Rand which you earn in capital gains will not be taxed, and then after that SARS will be like, I want my bite of the slice, right? What's important to note is that with capital gains, you have to also tell SARS, okay, this is how much I made in capital gains, so that they can tax. Obviously, like I said in my previous video, please remember to put money aside. SARS does not automatically take that money like with your salary and with dividends withholding tax, right? So you need to make sure that you know how much you will owe SARS, so that you can put that money away and give it to them whenever they want their money. Anyway guys, I hope this video was helpful. If you did enjoy it, don't forget to like, share and subscribe. Until next time, bye.